How do you legally pay no taxes in retirement? This video is going to give you 4 different accounts and the breakdown of how you can use each to pay $0 in taxes when you retire. Hey guys, I'm Tim Wolf. If you're new here, please go ahead and subscribe. And if you like the video at all, please hit the like button. It helps out a lot so I can keep pushing out these free videos. The first thing we're gonna talk about is a regular brokerage account. Now you can open up one of these through any brokerage firms, just like you would a bank account. Popular brokerage firms are Fidelity, Charles Schwab, TD Ameritrade, E-Trade. All those have brokerage accounts you can open. Now a brokerage account is just an account. It's just a place where money sits. It sits there until you actively invest in it. And within a brokerage account, you can invest in stocks, bonds, mutual funds, all sorts of different things. You're gonna have thousands of different options to invest your money into. The money that you put into a brokerage account is gonna have to come from your bank account. So it's gonna be taxed income already. But when you put it into the brokerage account, the money that you actually contributed, you don't have to pay taxes on it again because you already paid taxes on it. That probably came out of your paycheck. However, the federal government wants to tax any profits that you have on the money that you invested. So if you invest $1,000 in a brokerage account and 20 years from now, that grew to $10,000, the federal government is gonna wanna tax that $9,000 worth of profit. However, this is a video about how to pay $0 in taxes, so let me explain how to do that inside a brokerage account. Any profit that you have in a brokerage account is called capital gains, and there's a special tax code called capital gains tax. There's short-term capital gains tax and long-term capital gains tax. Remember, capital gains is just profit. So any stock that you owned or any asset that you owned within that brokerage account for less than 1 year, you're subject to short-term capital gains tax, which is the same as your income tax. However, if you own that stock for more than 1 year, you're subject to long-term capital gains tax, which is a benefit. So for long-term capital gains tax, if you're single, you can make between $0 and up to $40,400 per year in profit and not pay any taxes. You'll fall into the 0% tax bracket. For married couples, it's $0 to up to $80,800 that you can make in profit from capital gains and pay a 0% tax. If you make more than that in taxable income, then you're gonna pay 15%, and after that it goes up to 20%. And Congress is looking at raising this to as high as 37 or 39.6%. However, if you have thousands of dollars, hundreds of thousands of dollars, maybe $1 million in this brokerage account, if you only withdraw, and you're married, and you only withdraw up to $80,000 per year out of that account to live off of, then you're not gonna pay any taxes on it. It doesn't matter how much money is in the account itself, it just matters how much you're pulling out. Now, withdrawals from a brokerage account count towards adjusted gross income, in other words, AGI. This is a good thing in a sense that you're gonna be eligible for a standard deduction from your capital gains. Now, if your capital gains that you're withdrawing from your brokerage account is your only income, you can use that standard deduction towards your profit. And if you're a married couple, you can use a standard deduction of $25,100 off of the amount you're withdrawing. So instead of the $80,800, you can actually withdraw up to $105,900 minus that standard deduction will bring you back down to the $80,800. So you can withdraw over $100,000 a year from a brokerage account and still, using the standard deduction, fall into a 0% tax bracket because you're using long-term capital gains tax as long as all the stock that you're selling within that account you've owned for at least 1 year. And the great thing about a brokerage account is there's no income restrictions on who can contribute to a brokerage account. Anybody can. And there's also no limit on how much money you can put into a brokerage account. Now, the second account you're gonna wanna utilize to pay $0 in taxes in retirement is gonna be a health savings account, an HSA. An HSA is a great tax beneficial account. It's a place where you can store money, and if you want to, you can actively invest it in stocks, bonds, mutual funds, just like you could the brokerage account. Or if you just want to let it sit there like a bank savings account, you can do that too. The great thing about a health savings account is as long as you use it for qualified medical expenses, which is basically anything that you can remotely tie to being some sort of medical thing, you can use that tax free. So the money that you're putting in to the HSA will usually be deducted from your paycheck. Regardless, you don't have to pay any taxes on the contributions into your HSA. The money sits there, it grows tax-free, and then when you use it, as long as you use it for those qualified medical expenses, it comes out tax-free. So it's tax-free when you put it in, and it's tax-free when it comes out. It's a double tax benefit. Now, an HSA is great because you're gonna have a lot of medical expenses when you retire. And this is gonna help you so you don't have to tap into your 401ks or your IRAs or your brokerage accounts. The HSA withdrawals don't count towards your adjusted gross income. And when you do contribute to an HSA during your working life, it actually reduces your adjusted gross income. So it helps you save on taxes now and later. Anybody can open up a health savings account that has a high deductible health plan, an HDHP. The HSA is typically going to be opened up through your employer, and they will typically contribute certain amounts into your HSA, so it's free money. They may contribute $500 or $1,000, or they may not contribute anything, but they still give you access to the HSA, and you can still make your own contributions. Now, you don't actually have to go through your employer to open an HSA. You can open one up on your own as long as you still have a high deductible health plan. The IRS already announced the 2022 contribution limits for an HSA. If you're single, it's $3,650. If you're a family, it's up to $7,300. And if you're age 55 or older, you can contribute an extra $1,000. And there's no income restrictions on an HSA. It doesn't matter how much you make, as well as you can use your HSA at any age. You can actually use it now if you wanted to. The third account we're going to talk about is a Roth IRA. Now, anyone can contribute to a Roth IRA. You just have to have some sort of taxable income that you report to the federal government. And if you're under the age of 18, you have to open what's called a custodial IRA. An IRA stands for Individual Retirement Account. It's simple to open up. You can open one in less than 10 minutes through any major brokerage firm like Fidelity, Charles Schwab, TD Ameritrade. I have a video which I made about how to open a Roth IRA through Fidelity. I'll link it in the description down below. You can check that out. Nowadays, pretty much all the accounts are the same from different brokerages as far as fees, so just pick one you like and go for it. It's really, really easy to use, and it usually costs $0 to open one up. Now, a Roth IRA is just an account. It's just a place that holds money, but within the Roth IRA, you can choose to buy stocks, bonds, and mutual funds and invest it long term. The rules are you have to wait at least 5 years from your initial contribution when you first opened up your Roth IRA, but after that, you can withdraw your own contributions at any time. Or if you want to withdraw the profit that you made during retirement, you have to wait until age 59 and a half. After age 59 and a half, you can withdraw whatever money you want out of your Roth IRA and pay $0 in taxes. For the year 2022, you can contribute up to $6,000 into a Roth IRA, or if you're age 50 and older, you can contribute up to $7,000. Now, there are income limits for the Roth IRA. If you make over $129,000 as a single person or over $204,000 as a married couple, you cannot contribute to a Roth IRA. However, you can still contribute to a traditional IRA and immediately roll it over into a Roth IRA. This is called a backdoor Roth IRA. It's completely legal as for now. Later, Congress is looking to get rid of it, so utilize it while you can. The fourth account is going to be a Roth 401k, 403b, 457b, or TSP. They're pretty much all the same and they get taxed the same. It just depends on what your employer offers. In the private sector, they're called 401ks. If you work for a local or state government, usually it's a 457b. The federal government uses a TSP. And if you're a teacher, usually it's a 403b. So if you choose the Roth option and your employer has to offer a Roth option, sometimes they only offer traditional. But if they offer a Roth option, just like the Roth IRA, means you're going to pay taxes now. And in retirement, you're not going to have to pay any taxes on any of the money inside that account. The 2022 contribution limits are $20,500 per year that you can put into your 401k, or if you're age 50 and older, you can put up to $27,000 into your 401k, and that does not include any match that your employer may be giving you. With this account, similar to a Roth IRA, you do have to wait until age 59 and a half before you can withdraw that money, or else you're going to be subject to a 10% penalty and possibly taxes. However, during retirement and after age 59 and a half, you can withdraw as much as you possibly want and pay $0 in income tax. And you can always roll over your Roth 401ks or your Roth TSPs to Roth IRAs if you only want one single account. Thanks for watching, guys. That's all I have for this week. If you want to learn more, I do offer one-on-one sessions on my website, timwolf.com. You can sign up for a limited time. They're completely free, 45-minute sessions, and I can answer your questions more specifically. Again, if you're not subscribed, please go ahead and subscribe and hit the like button if you got anything out of this video. I'll see you guys next week.